Welcome everyone to today's session. We're going to be going through the Bookkeeper Blueprint, co-hosted by our partners and our guests from Exact Accounting. I'm just going to introduce slowly in a moment. But basically, this whole session is going to be about whether if your building company meets minimum standards from an accounting or a bookkeeping standpoint, going through the foundations that you need in place so your books, reporting, and numbers are highly accurate, as well as really high-level processes to optimize your current bookkeeping as it stands. And whether the option is if you do this in-house or whether you outsource it, etc. And best of all, from today's session, you're literally going to be learning directly from Exact Accounting, who are literally pros and specialize in bookkeeping and accounts for builders specifically. Let's welcome our guests, Nadia and Phil, and I'm going to hand it over the reins to you guys. You can take over the session and basically take everyone through the Bookkeeper Blueprint itself.
Right. Thanks heaps, Vinny. So we're going to go through this blueprint. The star of the show really today is Nadia. I'm just sort of going to help along the way. So what we're going to cover, I'll cover a couple of first principles to begin with. We sort of talk about this growth challenge and why is growing a business safely and sustainably a tricky thing in this space. And then understanding margins. Like we're going to talk about bookkeeping, but before we do that, we're just going to do a quick whip through our take on the way margins need to look and how money flows through a business. So a couple of first principles there. Then Nadia is going to take over and we're going to go through the bookkeeping blueprint. So systems and setup, so your tech stack, your chart of accounts, those real foundational things, key processes that you need to be implementing in the business around BK. And then we're going to talk about resourcing. So what are the things you need to think about when you're resourcing BK, so this critical piece of the puzzle isn't on fire for you in terms of who's looking after it. So we've got some tips for you there as well. So this growth challenge concept, this is a real generalization, this slide. So this isn't every single situation, and I know every business is a bit unique, but this is what we often see. So this is sort of like a principle that we often see in the market. Businesses grow. This is you could say this is like a revenue or projects line or activity, the amount of stuff you got going on. So they often start, at the bottom left hand, they'll grow, take on a fair bit of work. That sort of stabilizes often. They start to get quite confident in how things are going. They take on more work. It gets a little bit wobbly. And so they back off a little bit. They stabilize a little bit more. And then once they feel really confident, they take on heaps of work and they just get going with it. Unfortunately, we often see this as a line with profit. So if you're not really on top of what's going on, profit tracks up okay. You take on some more work, it starts to drop out. So you think, oh my goodness, I'm actually doing more work, but the profit isn't following suit. You then start to stabilize and think, let's go, let's really put our foot down. We know what we're doing now. And then you take on a whole lot of work. Unfortunately, profit sometimes can go through the floor at that point. This is that whole profitless boom kind of concept. Why is that so? Well, it's because of complexity. So unfortunately, this business model, that we're in here, building and construction, there's almost exponential relationship in terms of how hard things can get as you grow and as you take on multiple projects. You've got cash coming in and out. You're trying to get across multiple teams. The more projects you take on, the harder things can get. So it's really critical that you've got, the right systems and processes in play. In terms of margins, so what does the cash look like as it flows through your business? We've got this little chart here. I think we might have shared some of this on our last webinar with you guys, but this is sort of how we feel margins should look and how the accounting stack should look when you're looking at how cash flows through the business. So if we took a builder with a revenue of around 3 mil, this is what we see the breakup of that 3 million being in terms of the cash going through the business. So around 80% is going to get chewed by COGS. Now, this is just a generalization, and this is also, we're thinking more sort of residential builds here, 80% or so in COGS, around 10% or 300K of the 3 million is going to get chewed up by overheads. And at the end of the day, you're left with this 300 grand in terms of net profit. So it's sort of like a bit of a benchmark. It gives you 20% gross margin, 10% net margin. This is what can happen if things don't go well for you. So we've got $1 million project here. We've had that blowout in terms of direct costs. So, things were delayed, prices went up, whatever the case might be, you didn't get the scope right, and COGS, all of a sudden, your direct costs went up to 90%, so a 10% blowout there. At the same time, overheads for the business are running pretty hot, and so we're at 15%. Unfortunately, that means you've made a loss of 150 grand. Perfection, in terms of what we see as perfection, or ideal, if you can get this, then you're doing really well. Let's take that same $1 million. COGS, you've been able to get COGS in at 75%, so 750. So you really manage that very tightly and you've estimated well. Overheads are single digit, and that's what we love to see, is single digit overheads. And your net profit, therefore, a combination of those two measures, your net profit's dropping out at 17% at the end of the day. So, one of the things that we think is mission critical and really foundational, and I know you guys, in this space as well, will vouch for this too, but you cannot see those margins. You cannot get accurate reporting on your COGS, your overheads, how that's all falling out in the business if you don't have this key foundation stone in place, which is rockstar bookkeeping. And so this is where I'm going to bring Nadia in, and we're going to start with one of the core foundations of BK, which is the tech stack. So I might just roll this out for you, Nadia, and then you can speak to that. Yeah.
Thank you, Phil. Hi, everyone. Yes, so this is my area of expertise that I can talk most about. So tech stack is really important for your business for efficiency and to have clarity in your business. So I always recommend to people when I first meet them, a lot of people come across to us doing things very manual. And the first thing we look at is automation. How much can we automate for you? Because whenever there's manual work involved, there's more errors and it's also more time consuming. So one of the big things that I would definitely recommend is a receipt capture system, which is like Dex. There's also the free version of Xero, which is HubDoc. However, we definitely recommend Dex. It's far more superior. It's got a built-in AI. So it builds up a memory of the transactions that you are processing. So along the way, the longer you start using it, the more it builds up that memory. So the less you have to do, really, because it reads the data and it pre-fills the invoices that you then publish to your accounting software. With the accounting software, I always recommend Xero as well, but I'm a bit biased, to be honest. The reason for Xero, it's definitely more user-friendly and it integrates with so many systems. You can integrate your estimating and job management software. In this case, we've got BuildExact as an example. And you can also import your deputy or any sort of timesheet software that you might have, which also makes it really good for your labor cost tracking. There are other options. A lot of people come to us saying that our deputy is a bit big for them, or maybe they're not that size yet where they need it. There are other options as well within Xero itself. Xero has Xero Me. So for a lot of our clients, we set up Xero Me for their staff, and they can actually track their labor costs to a job specifically, which also is very, very helpful because that gives you a true margin on each job that you're making. Often the payroll that we see is not set up correctly. So it's all in the setup. That first steps is really, really important. And if you've got this tech stack properly set up, if you don't know how to set it all up and how to link it all, I definitely recommend getting a professional just to do that initial setup for you and that initial integration. And then really from there, these softwares can do it all for you. So definitely recommend doing that right from the beginning.
Some of the things around the tech piece, we probably expect with our US friends on the call, they're going to be using, QuickBooks or something of that variety. In the Australian members on the call today, if you're not using Xero, we really strongly recommend, you move across to it. It's one thing to have, all this stuff in play, and technology's been, I think, just so easy to get up and running these days. It does lead you into a false sense of security sometimes, though, that you've got, this easy to set up software, and I've got, invoicing coming in and out, and a full sense of security around the way the numbers are starting to look as well. But if you don't have this set up properly and you don't have it, each of these pieces of the stack talking to each other properly, so fully integrated, then you're going to be double handling, you're setting yourself up for potential manual errors when you're manually entering data as well. It pays to spend some more time trying to make sure that each of these platforms are properly integrated with each other. The other thing I wanted to mention there too, though, is, and there's sort of been a little bit of comment in the chat as well around, coding various aspects, like particularly wages, how we code those to either overhead or COGS. And that's often a real challenge. The key to that often, though, is using a really strong time and attendance tool so that you're properly timesheeting, and that even within the timesheeting tool, that say as an owner, you might actually have part of your time going as direct costs because you're on site and you're project managing, that sort of stuff. Whereas you might have other aspects of your labour cost going as overhead. You're quoting, you might be spending time in sales and marketing, that sort of stuff. And so you need to be able to timesheet all of that activity out. So whatever you choose, whether it's Deputy, Zero Me, any of the sort of products you choose, you just need to be able to make sure that you can map it to a job. So you've got to actually map that activity to a job code, and then you've got to map it to either an overhead or a COG. They're the fundamentals.
Yeah, Phil, and we're going to touch on that as well a little bit later on in the slides. But the way that you're going to split that, it's all in the setup. If you set up your payroll settings correctly initially, you won't have to do many of those manual adjustments at the end of the month to reallocate from overheads to cost of goods sold. Nobody wants to do that extra work. So if you set up your pay items and your payroll settings correctly, it's really going to allocate itself by just the staff entering timesheets. The only thing that I must mention that no accounting software would do, it won't track on costs, labor on costs like superannuation. It doesn't automatically do that. That is still a manual calculation at the end of the month as part of your month-end process. But we'll discuss that a little bit later as well.
Yeah, and there's a few kind of questions in here around coding to, can you set up Xero to be able to track job costs and allocate costs to jobs, different job categories. Yep, you can. The tracking codes in Xero that you can set up, and you can code those to the same code numbers or job numbers that you're using in, say, Build Exact, so that you can have all that line up properly. We are going to kind of delve into some of that content in some of the following slides. So we might sort of hold on some of those questions because I reckon we'll cover it off.
Yep. Okay. And of course, then if everything stacks up correctly, reporting is beautiful.
Yeah, that reporting bit down the bottom.
Yeah.
So you got all your workflow, happening well. You got really high quality data coming in properly, and therefore your reporting out the bottom end of that is reliable and can help you make really good, strong decisions in the business.
Yeah.
Okay, chart of accounts.
Yep. So one thing that we often see when clients come over to us is a really overcrowded chart of accounts. So the first thing we do is tidy it up. And I always recommend that to any business owner. Try and keep your chart of accounts straightforward. Don't overcrowd it with heaps of sub-accounts. Don't allocate new account for every single customer, every single job, or every single supplier. We've actually seen that on chart of accounts. So really have your core accounts, your revenue, your cost of goods sold, which is your labor, material, subbies, licenses, things like that. And then everything else is your overheads. So if you can do a nice tidy up, then you can make more sense of your financial reports as well. Yeah, and splitting out overheads and COGS is really important. And in that section, it's really important to know how to split the labor, which we'll also go into more details a little bit later. And there are some automated options, and then there's a little bit of manual calculation as well. But yeah, it's important to be able to split that and have the correct margins on your jobs. And the labor costs. So also often we see with directors, they might draw a salary, but it all goes into overheads. But a part of it, if they're on the tools 50% of the time, is actually part of cost of goods sold. So it's just understanding what fits in where and keeping it simple. Don't overcomplicate your chart of accounts. Just the core accounts, that's really important. You can track your different costs and revenue by creating your tracking categories. Within Xero, you've got 2 levels of tracking. Often what we do is we'll have level 1 would be job codes, level 2 would be activities like carpentry, plumbing, whatever, but then you've got the job code. So within Xero, you can do 2 layers of tracking, but you can still use the same GL code on your chart of accounts, but it's just the way you run your reports and the way you filter your reports per job will be much cleaner.
Yeah, it's a good sort of little distinction there that you have these tracking codes, and there's a few levels of that, because there's a question there about being able to allocate in Xero Me to actual work that's been done, whether it was framing or fix out, etc. And so you can have a job code, but then you can have, like an activity code as well.
You can do 2 layers, yes. Yeah. You can do 2 layers. Often with the timesheet side of things, we can set up like a separate pay items for each activity. So for labor, I would recommend setting up a separate pay item in your payroll settings for each activity, but then using the job codes to track the job. It's more so for the material and the subcontract, like your bills that's coming in, where you're using the activity tracking, which is the second layer. Yes.
Yeah. And I guess it sort of sets up the situation. Where am I managing this sort of stuff? We do a lot of work in Build a Trend, Build Exact, Jobman, Jonah, like all the different platforms under the sun. It really is important that you have a place that you can go where you're managing these material things like, job costing. We're going to talk about job costing in a second, but where you're getting a really solid read on how your margins are traveling per job. And so you can set up Xero to do that. And it's really good to have some discipline around having those job codes being allocated, activities, etc. But you may end up finding that Build Exact or Build a Trend or one of those platforms is a better place for you to be spending more time analysing job by job profitability. Wherever it is, make sure you're doing it and make sure that the 2 systems reconcile, that you don't have a disparity around the data and, Xero saying one thing, Build Exact saying another. So that's a really critical thing.
That's a good point, Phil, because if you are using project management software linked to your accounting software, it's always important to make sure that the tracking categories are set up the same in both systems.
Yeah.
So if you're going to raise a new job in Build Exact or whatever system you're using, you also need to go and set it up in your tracking categories in the accounting software. It's not going to automatically create that tracking category for you. If you don't set it up in your accounting software, whatever bill or invoice you're creating there, it won't sync in because there's no mapping.
Yeah,
so it's
and
just
we go
important
into a bit more detail on what we think is sort of, an ideal workflow for that in a minute.
Yeah.
So, okay, we might move to the next one. So we got, they're real foundational pieces, getting our tech set up properly, getting our chart of accounts set up properly. Now you got to drive the car, now it's built, we've got to drive the car properly. So we're going to go through some of these key processes, starting with bank recs.
Yep. So the bank recs, a lot of people think, bank recs, it's boring. Nobody wants to do that. But it is really, really important to do that and to keep it up to date. I always say on a weekly basis, if you can, don't leave it till the end of the quarter when the BAS is due and try and smash through 500 bank transactions. Errors are going to happen, misallocations are going to happen. It's really important to get into that good habit of at least doing it once a week. It's better if you can do it daily, but obviously everybody gets busy, but definitely get into the habit of doing it once a week. And I always say, when you pick up an error on your bank rec, it's always better to deal with it and sort it out right there and then, and don't leave it. Like if there's some sort of variance, or also try not to leave stuff unreconciled for too long just because you don't know how to code it. Maybe find out and then just code it, because it's better to get it all up to date. And that's part of maintaining your accounting software as well. And of course, your accounts payable and accounts receivable will not be up to date and will not be correct if your banks aren't reconciled, because there's obviously money coming in and going out. And in order to have an accurate AP and AR balance, your bank recs need to be up to date. Also, on the AP side of things, That's where Dext comes in as well. You need to make sure that all of the bills that's came into Dext has been coded and published into Xero, because that raises your AP as well. So that's sort of the first step that you'll need to do. We always start with Dext, bank recs. APAR reports are really the final end result of those first two steps, and correct payroll processing. So like I said, we're going to go in more detail. So often we see directors not putting themselves on the payroll, drawing money out of the business. It's really important then also for directors to be on the payroll, also for cost tracking and for compliance purposes. I'm not going to go into tax because that's not my area of expertise, but I'll just mention drawings will trigger some other Div 7A issues. So yeah, and then also the cost tracking on the payroll. Timesheet tracking is really important, and setting up those pay items correctly. The one thing I must mention as well is that at the end of the month, it's really good to get into the habit, and that sort of touches on the end of month process, to extract like a payroll data report and seeing if it makes sense in comparison with your jobs that you've got running.
Yeah, and for Australian members on the call, there's a whole lot of confusion around STP2. It's been out for a little while now, particularly around allocating allowances in your payroll. We're not going to go into the nitty gritty on that. We've got a really good video that just shows you exactly how to set it up. Or we might share that, Vinny, after. But a lot of people, I think, have ticked the box to go, yep, STP2 compliant. But if you look into the back end, it's not actually set up properly. The ATO, we understand. No one from the tax office on the call today, hopefully. We understand they've been pretty much waving through any compliance issues with STP2 so far, but that's coming to an end, and they're really starting to crack down on that space in the lead up to same-day super. So, which is going to come in a couple of years. So
a lot of people, they've enrolled their Xero file or their accounting software for STP2 by clicking that button, but they're actually not compliant because they're not reporting the pay items, the wages and the all-purpose allowances correctly to the ATO. It has to be split out, and it's not a fair work thing. It's an ATO thing, and it's in relation to Services Australia and what is actually wages. So it's really important to do that split correctly. And we've got an article on our website with a lot of detail on that as well. And then, of course, job costing. So if you set up your two categories, not everybody uses the two categories, but I have noticed more and more builders are starting to use those two, where they've got the first layer job code, second layer activity, which is like your plumbing and carpentry and drywalling, all that sort of stuff. When you run your report, if you make sure that all the data that goes in is correctly allocated, you won't have to do the big cleanup afterwards. Why does my bottom line look like this? Now I have to go dig in the data to find these transactions and reallocate them. So it's really good practice and good habits to make sure it's coded correctly before it actually goes into the accounts. That's if you do it right the first time, you don't have to do a big cleanup afterwards. So the job costing is really important. The one thing I always say is don't assume, especially if you're using an external bookkeeper or even an in-house bookkeeper. It's not somebody that's on the tools necessarily, or somebody new that don't know the business that well yet. I always say, if you don't know, just don't assume. Get the correct information before publishing it in, because it's way harder to clean up the accounts than some people think. It's a lot of work.
And then there's job costing in Xero, where you can allocate things to carpentry, et cetera, those kind of higher level, kind of codes. Then there's job costing in Build Exact itself, or in your, job management and estimating software. That's mission critical too. And that is where you're not just lining it up to, say, carpentry, for example, but you're actually lining it up to the estimate. So you're matching what the actual cost is against the estimate, and you're looking at whether there's been a variance, so that you can really see how your margin is going, in real time, really. There's job costing, in your platform, and then there's, job costing on the Xero side of things as well.
We often run budget versus actual reports in the project management software for clients and then compare it to Xero, because ideally you want to have your accounting software aligned with your project management software, because at the end of the day, your accounting software is the real source of truth, because that's what's going to be reported to the ATO as well at the end of the day. So you want to make sure that two are in line. Often we see where people just rely on the project management software. They think they're making a huge margin, but then when they go to the accounting software, they're actually not, because there's other costs involved that's not taken into consideration in the project management software.
Yeah, it's classic. We see this all the time. Nearly every, I guess, builder we work with, when they say, I'm estimating, 25% margins, and then at the end of the day in zero, it's nothing like that. What's going on? And the answer to that is you're not job costing properly. So you're not actually allocating those costs on the way through the project properly. And so therefore you're not seeing what the actual margins are that you're getting throughout. It's really important to, and it's one of those things, it's a binary. You're either doing it properly or you're not doing it. There's no kind of like, I'm sort of job costing. It's you're either doing it fully and properly, or it's not happening at all.
Yeah, you won't see any labor on costs in your building software.
Yeah.
You won't see it there. That's only in the accounting software. So you need to, there are ways to align the two.
Yeah. Okay. We're going to move to purchase orders, because this is a critical part of one of the processes that we really recommend that you have in place.
Yeah. So with the purchase orders, a lot of small builders say, I don't need to use purchase orders. We're not that big yet. It's an extra process we don't need to use, but it really is best practice. And it's a really good habit to get into, because you lock in the price with your supplier and the timing of the delivery of the goods, or, when a subby needs to do a job for you, but also it makes the tracking of the jobs correctly. So, on that purchase order exactly which job it relates to. And with purchase order, you can also plan your cash flow better. I always say to people, if you know what's going to come in and what's going to go out in the next month or so, you can plan your cash flow better. So purchase orders is definitely a good practice, and it's more accuracy and efficiency. Yes, when invoices do come in, goods get delivered, it's very, very quick and easy to just match it to a PO, much easier than trying to figure out then which job code does this relate to. And often when you provide purchase orders to your suppliers, they will have that PO reference on the tax invoice once the stuff's delivered. And then it makes it a lot easier, especially if you're using somebody external to do your bookkeeping. If you are one-man show, probably you'll know exactly what it relates to. But if you're getting bigger and you're relying on external bookkeepers or somebody else to do your bookkeeping for you, chances are they're not going to know, because they're not on the ground, they're not on the tools. So that just helps for accuracy as well and financial clarity. And it's just a best practice. I definitely would recommend getting into that habit. And I see more and more smaller builders sort of starting to do that. And it's also best practice to match those bills coming in to what the purchase orders are in your software. I believe, I'm not a pro on the dashboards in the project management software, but it also gives you more accurate margins on your dashboards, I believe.
Yeah. I reckon it'd be just out of interest. How many, can we just drop into the chat, is using purchase orders across the business at the moment? It's just kind of a yes or a no, I reckon, that one. Yep. Okay. It's interesting. It is one of those kind of myths that we wanted to bust today. I think small business purchase orders, that sounds like a big business process to me. And it sounds like it's not a good return on my time. 100% is, because the alternative is you end up having arguments with suppliers because it was delivered at a different time. And I said this, you said that. It really clears up the supply side of things. And it makes your PK side of things really efficient. You're not sort of arguing about, or not arguing, but discussing and wasting time chasing each other about how to code a particular invoice. It's all much clearer then, because you've got a purchase order to do that. So if you're not using purchase orders, kick it off now. Maybe pick your next project and start to run purchase orders. Basically, as soon as the job gets signed off and you're ready to start rolling, issue the purchase orders out and go from there. We might keep moving here.
Just a quick question here from
Yeah.
Josh for Nadia or for Phil. Josh is asking, would I need to have 100% of my job transactions in POs if I wanted to implement that system?
No. So often we see clients when they start a new job, they will start from that new job doing POs. You don't have to get all of your existing jobs in POs, especially if they're coming to a close.
But I think, what about if you had, like, for example, you've got a subs with a big lump sum that you're paying out or something, but then maybe you've got like just a trip to Binnings or whatever to pick up some.
Yeah, no. So those small Bunnings ones, no, you don't need POs for that.
It's almost like a contract with your supplier. You know, like you basically lock in a price and a time. Any of those things that are material in the build that you don't want that to go south on you, then that's where I'd be using the purchase order. Is that right, Nadia? Is that,
100%. If you're just quickly running to Bunnings to get a new drill, definitely don't need to PO that. I wouldn't recommend that. That's immaterial. You might still want to cost that to a specific job, or if you need to extra paint, but yeah, definitely only for the material big stuff.
This is what we sort of see as the current process if you're using a software like stack like Dex, Xero, and Build Exact. So maybe if you want to just talk that through, Nadia.
So there's the two-way sync now between Build Exact and Xero, but also I know Xero has a two-way sync with many other softwares. We work with a couple of softwares. Some of them, I say, is not a true integration. It's a bit of a false integration because there's some limitations there. But certainly a lot of the systems these days, and I see it more and more where more of the project management softwares are being upgraded to integrate a two-way sync with the accounting software, whether that's Xero or any other software you're using. The main thing there is making sure that your mapping is set up correctly. If it's not mapped, the two systems won't speak to each other. So it's really important you set that up correctly. But the flow normally is from the supplier. So we got this nice graph here, from the supplier straight into Dex. So there's different ways of getting documents into Dex. Often you'll get an email in your accounts email with a PDF invoice attached. You just forward that email to your unique email address into your Dex account. You really just hit forward, and then Dex reads that information and pre-fills the bill, which you review and then publish into Xero. It doesn't go into Xero automatically.
And
Otherwise,
at that point, you're matching it to the job and a purchase order if you've got a purchase order in play as well.
Yeah, because if you've got a purchase order already set up that's waiting there, Dex will pick up that purchase order. So you can actually pick and select the purchase order that bill relates to, and it will automatically match it to the job. And then you publish it into Xero. Other ways of getting documents into Dex is setting up a fetch function. So Dex has a fetch function. It's mainly with the big suppliers like Reese and Bunnings and those guys, and Mitre 10, where you can set up a fetch function. If you've got an online account with those suppliers, you just need to log in with your login details for that supplier and you link that fetch function. Dex will then go and extract your invoices and your statements out of their software straight into Dex. So there's no upload that you need to do. The other option as well is mobile app, taking a photo of a fuel receipt and uploading it to Dex. And you can code it on your phone as well. So there's various different ways of getting the documents into your receipt collection software. Goes into Xero. So I always recommend code it in Dex before going into Xero, because you don't want to do a big cleanup in Xero. Once it's in Xero, Xero speaks with your project management software if a bill was paid. So yeah, it's that automation process that flows really nicely. If you can get that set up correctly, it's really going to free up your time as well. There's more accuracy as well.
There's a question, Nadia, around Buildertrend and Xero and what we think of the integration between Buildertrend and Xero. I know you've done some work in that space.
I've got lots of clients on Buildertrend. Yeah, I've got many clients on Buildertrend. Look, Buildertrend is a really good software. It's a good tool. I do like the time clock reports. The only thing is that because it's a US software, it doesn't recognize GST. So often what we see is the GST don't pull into Xero correctly. That's what we often see. They may have updated that recently, because I know that they are obviously working hard to, get more into the Australian market. So they might update that.
Yeah.
But it's it's not bad at all.
Yeah.
I've also got some on Procore, plenty on Build Exact. So there's a few out there.
Yeah. Okay. Righto. There was some questions at the top of the show about month-end process, people wanting to learn all about that. So let's plow through this. This is a bit of a checklist. I might just roll a few of these out at a time and you can pick your way through.
Yeah. So obviously it's so that we can have meaningful reports at the end of the day to make better business decisions. You can't make business decisions. Am I going to buy that new ute or that machinery if you don't actually know, if you're making money? So that, and the bank recs is definitely a big thing. Your accounts are not going to be up to date. Your reports will not be correct if your bank recs are not reconciled. I always say to clients, be careful of just cash coding things on your bank recs, because often clients will do a cash code and just smash through the transactions and just add a GL code. That's pretty dangerous. So I wouldn't recommend that. Often things slip through the cracks then. So really match your transactions to an invoice, a sales invoice. Match your transactions to a bill. It is best practice for GST purposes anyway, to make sure you've got a supporting document, a source document attached to that transaction. And the coding is also easier that way. At the end of the month, do a reconciliation of your AP. So any supplier statements that come in at the end of the month. I know it's not always right at the end of the month. Often we get supplier statements around the 5th or the 10th of the new month, but it's definitely worth waiting for that and doing a reconciliation, matching those amounts payable to what you've got in your AP. As much as you can, use ABA files when you're paying suppliers. Often we see a lot of people doing random payments, manual payments. When it's due, they receive an invoice or they receive a statement. Somebody's chasing them for a payment and they just pay it. Often then there's duplications or incorrect payments made. So really get into the practice of doing an end of month close with your AP and reconciling it, and then doing a batch payment of the invoices outstanding and actually matching it precisely to the outstanding invoices, not a random round amount if you can. If you say I can only pay X amount this month, try and make up that X amount by matching exact invoices and getting as close as possible to that amount. Using ABA files out of Xero or your accounting software, which you then upload to your bank, is also best practice, because your bank, that will reduce the number of bank transactions you're going to have to reconcile on your bank, because it's one transaction that it matches to the individual invoices in the background. If you're paying manually individual invoices, there's going to be way more on your bank rec as well. So definitely recommend that. AR, definitely doing a big cleanup at that at the end of the month, sending out your statements. So you can send statements to your clients from your accounting software if everything's synced in properly. Just bear in mind, some of the building software, the project management software, you have, when you invoice in there, you have to hit that sync button for it to go into Xero.
So again, making sure the two platforms are talking to each other properly.
Often people think that when they invoice something in the project software, it's going to automatically come up in their revenue, in the accounting software, or in their AR. It doesn't always happen like that. You have to hit that sync button. So that's part of the checks you'll do, and making sure you've synced everything, making sure it aligns with your accounting software.
So I've just rolled out the rest of these, Nadia, if we would just want to smash our way through.
So superannuation, it's important to reconcile your superannuation accruals report to your balance sheet. It's always a good practice to check that. So if you're using automatic super in Xero, run the accruals report, make sure the balance there agrees with what's on the balance sheet at the end of the month. If it's not, then something happened. You need to investigate that or ask your bookkeeper to look into that. And again, don't forget payroll for owners. We've touched on that before, making sure that the directors are also on the payroll, making sure all your STP is filed for your payroll. Really, you should file your STP after every payroll is processed, not just at the end of the month. But it's a good check at the end of the month to make sure everything was filed. At the end of the month, after everything's been processed and reconciled, the final step would be to run a profit and loss statement. You can filter your profit and loss. We always say filter it for unassigned jobs, because it's just a self-check to see that you've actually coded everything into a job code. If the unassigned P&L comes up with any figures under your revenue and cost of goods sold, it means something related to a job wasn't coded it had
Yeah.
no job tracking on it. And then you can drill into those transactions and then just code them. So that's a really good practice to have at the end of the month. Ideally on the unassigned P&L, you just want to see the overhead costs.
Yeah, that nice little trick there you can run as part of your compliance on yourself to make sure that you have caught everything and you've properly allocated all those cogs in particular into jobs, that you can just run this P&L for unassigned jobs and then use that as a way to make sure you got everything sorted. We move on here. So we're going to talk now about resourcing for BK. So how do you approach, who's doing the BK? So our sort of frame on this is that there's sort of two main things you want to look at. Expertise. So it's obviously, there's quite a bit involved these days. Like we've sort of just been talking through quite a lot of stuff there. You need to have someone who's running your books that really knows what they're doing. If that's you, then you really need to, lean in on this part of the business and really work out how to navigate this space well. So you got to have the expertise. We think wherever you can, it needs to be someone's specific focus. It's a really mission critical thing in the business. And so therefore you need to have someone who's dedicated to this function. We get that that's not possible when you're starting out, but as soon as you get to the point where you think you can afford to either pay someone else to do it or, bring someone in-house, once you get to a significant scale, it really needs to be, this is what they do. And it's a dedicated focus. If you do that, then you get these two kind of core things. You get numbers you can trust. So you get really strong data and strong reporting that you can make good decisions on. And you unlock a whole lot of your own time. So, when you start out as a business owner, you have to wear all the hats. As you grow, though, and I'm sure, and Vinny and the guys, Marty, talk about this sort of stuff all the time, where are you getting the most leverage for your time? And if you're right into bookkeeping, as I can see on the chat, some people are, and they're all over it, that's great. And if you think you're getting maximum return from your time on the bookkeeping function, then go for it and keep going. If it's not, and you think you should be spending more time on estimating or on your staff or on getting more clients and sales and marketing, then it's probably a good idea to start to look at, outsourcing or getting a part-time bookkeeper to look after things. We've got a comparison of the three different types of bookkeeping or the approaches to bookkeeping, starting with DIY, so doing it yourself. So I think that's sort of like about a third of the people on the call today. We've broken down the pros and cons for the three different approaches to bookkeeping. So, and we'll supply this afterwards too, so you guys can look through it in detail. But just at a high level, Nadia, what are the pros and cons of DIY? Because it's not all bad, right? And sometimes you just have to do it yourself to begin with.
Yeah, especially if you're starting out in small.
Yeah.
You want to get into the numbers. You want to understand your business. So it's really not a bad thing if you do it yourself in the beginning. It is cost saving. So obviously, if you're starting out, you want to have minimal costs to your business and you get familiar with your accounts. And you also learn a few new things, which is never a bad thing to learn something. The cons of that is that it's really time consuming. It eats into your family life. I've had people say to me, Nadia, I'm on the verge of divorce. So, it's really, everybody's situation is different, but if you're doing it on your own, you also have limited resources. You don't have somebody you can reach out to and say, hey, what do I do in this case? You're really on your own and you have to potentially Google everything if you're not sure. If you're a whiz at books, probably then you can continue doing it for a bit longer. But I reckon as you hit a certain margin on your revenue, it's going to get a lot for you. You're just going to run out of capacity on your days to get to it.
So this is really, DIY, it's just balancing that, I can do it myself. I'm not having to pay anyone else for it, against the opportunity cost of, where else you can be spending your time and what are the potential issues you're creating for yourself in your financial hygiene if you're doing stuff that you're kind of not really 100% sure on. If we think about those margins and the top of the show, it really doesn't take much to go off track from a financial perspective to get into trouble, particularly as you grow and you're taking on more projects. So we reckon And look, this is just a raw thumb, but you can probably get away pretty safely up to 600K in revenue, maybe $1 million, before things get really quite difficult. And Nadia starts getting those calls around, if I don't do something about this, I'm going to lose my marriage. It's getting pretty nasty. So that's DIY. Outsource, if we want to just run through that at a high level.
Yeah, so outsourcing is definitely a good idea once you start getting busier, and it's also cost effective because, often the staff are a little bit cheaper. You don't have to worry about the other extra costs like super for those outsourced bookkeepers. They often have the expertise and you don't have to go and source somebody and find somebody. They already have that expertise. They've got all the tools and the technology available to them. Often with outsourcing, they get the training that they need. They stay up to date with new trends and new technology and the scalability of it. You can often, with outsourcing, they grow with your business as well. Services change, can increase or decrease however way your business operates, and it enforces best practice. Because of that, because of the policies that they have for their outsourced business, that you're going to have best practice accounts, clean accounts, and it's also tax deductible. The cons about it is you losing control. Often people have a difficulty letting go of their books a little bit because they want to feel like they're in control of it. I always say, when clients come across to me, it's good that you still have some control. Like an example is your accounts email. I don't believe it's good practice to hand your accounts email to somebody outside that doesn't understand, that's not in your business. It's always good to look at your accounts email, making sure that what comes in you are happy with, and then you send it on to Dext or whatever, because that way you do still have some control. If there's any dispute on a bill, you know about it and it doesn't go into Dext. So that will relieve the loss of control a little bit. Communication challenges can sometimes happen just because of work capacity and a little bit of a delay. If you get a good outsourced company, they should turn around within 24 hours. Often a lot of outsourced companies get back to you a lot sooner than that. Customization and flexibility. Yeah, that's also a con sometimes, because they can't always just change things immediately the way you want it to be. They might have certain processes as well. Sometimes it might take a little bit longer because you need to change your processes, but it's not impossible.
Yeah, we probably should add a con in there as well, which is if you're not using an outsourced company that knows how your software works and is the business model of building and construction, then they're going to miss things. They're not going to know how to set it up properly with you. And you also need to, if you're going to go outsource or you're going to hire a part-time bookkeeper internally, you have to be very clear with each other around all of those key processes that we've talked through. You can't just punt it to them and hope it's going to work. You need to have a very clear rules of engagement around how it's going to work, which is what I guess Nadia is saying around that customization and flexibility piece. If you use an external bookkeeping service, then you may need to adjust some of your practices to suit the way they're doing things. And oftentimes, if they're good at it and they know what they're doing, you benefit from that because you might be doing things a bit of a janky way, the way that you kind of taught yourself, as opposed to what you'd think, industry best practice looks like. So there is a little bit of an adjustment period there if you do end up, either having someone do it for you or you go to an outsource. We reckon with an outsource option, you can get pretty big. We do businesses up to 20 mil. We do some that are over 20 mil. That it sort of changes the nature of the engagement, but you can run a really big business with an outsourced bookkeeping service. And again, you get to focus your time and energy on the things that matter most. In terms of employing someone in-house.
Yeah, so obviously that's not a bad thing. Obviously, if you're going to get to a really big size, 20 mil or anything over 20 mil, we often see that and it's sort of expected then that a company will get an internal accountant plus an internal bookkeeper, internal AR, internal AP, because they've just grown that much. You've got more control and oversight. I don't think you ever lose control over your accounts anyway, whether you're doing a DIY or outsource or in-house. but you do have control having somebody in-house, and also it's somebody you can just tap on the shoulder because they're always there.
You can walk to the next room, or you can, slide your chair across and go, hey, where's that invoice? They're right there.
Yeah. But the con for that is they come at a cost. Like it will cost you significantly more money, because you obviously want to get somebody that's got the skills, that's got the qualifications, that's got the expertise, and they do not come cheap. You've got immediate access to them. That's the tapping on the shoulder, but they might have limited expertise. You might get somebody in-house that's been in an accounting Big Four firm all their life, but never worked with building construction. I've seen that. So then they have to sort of find their feet with building construction industry, which is, normally they will pick it up quickly just because of their background. So that's something to consider. Customization is a good one, because if you've got it in-house, you and your team can collaborate and customize systems and processes as it fits you and your business, and for specific jobs as well. The only thing is that you will be depending on that person a lot. That'll literally be your one and only go-to person. There's no other network.
It gets a bit hairy too, like you might, like payroll's coming up, they're sick, or they want to have a holiday, or any of those sorts of things. You really, you've got a single point of failure. And in business, we're always trying to remove those single point of failure. And so for something that's mission critical like this, that can be a challenge, which is why, we say in-house is a good option, but it's actually probably a better option once you're big enough to be able to afford a proper accounting team, where you've got good structure, you've got a bit of redundancy. It's probably not just one person. You've got a few people now in the accounts function, and potentially, even as you grow bigger, you've got a manager looking after that as well. So look, everyone's going to have a bit of a different take on it. Obviously, conflict of interest here. We've got a horse in this race. We do outsourcing, so we're going to say outsourcing is a good way to go. But we also recognise, though, if you do this stuff well and you've found yourself a good bookkeeper, that's brilliant. And so it's more just then about making sure that you've got all of those best practices that we've gone through today to underpin the way you're either doing it yourself or the way your bookkeeper is operating. So Vinny, like that is. We've put together a checklist here. If you want to go and get an outsourced person or hire someone in-house, we won't go through this, but we've just got a bunch of questions that you need to ask them if you're thinking of going outside and not doing it yourself anymore. So we've got a bunch of questions you can ask on, what's their expertise like, what sort of reporting are they going to do, how's the commercials going to work, like how are you going to charge me, what does it cost, that sort of stuff. So we've put that piece together there, and we'll share that with everyone. But that is essentially it. So I guess we can probably do some questions and things. But before we do that, I just wanted to say, if anyone, because this does get quite specific. I know there's a question in there around, why should I pay myself a wage? We would have those kind of conversations confidentially. Every situation's a bit different, and we're starting to stray into tax. And Nadia mentioned, Div 7As, dividends, whether you want to set up bucket companies, all those sorts of things. It can become quite a different conversation. So we might have that one separately, but we wanted to put the offer out there that if anyone wants to book a consultation with us, we're more than happy to, give you guys some one-on-one time so that we can work our way through any of the specifics that you feel like we might not have been able to get to today. Obviously, we'll have a chat to you about whether you want to, talk to us about taking on the service, but that's not essential. Like if you just want to pick our brains, we're happy to, offer that as a service too. So more than happy to do that. But let's go to some of these questions. What have we got there, guys, in terms of the ABA question I saw earlier on, Nadia?
I missed that. Where's that?
Yeah, it's just this thing around, ABA files versus paying, as pay as you go almost, on the fly, and the complications. So I stopped using ABA because it's too difficult to reconcile. Individual payments is easier to reconcile. That's people have, I guess, different views on that. What's your take on how ABA can make things more robust, I guess?
Well, if you're using ABA for your supplier payments, you have to select the invoices before exporting the ABA. So essentially, the software has already reconciled it for you. That way, your AP in your accounting software will also quite likely balance better with your supplier statement at the end of the day. If you've got multiple individual payments as well, it's more time consuming reconciling that. I know a lot of people say it's easier because they want to do it individually and match it individually to a job code. But if you create your bills out of, let's say, text, you've already done the coding there. You shouldn't do the coding only when the transaction hits the bank. The coding should have been done already. When the transaction hits the bank, you just match it to your bill. So it's just a best practice, and if it makes the reconciliations much easier, not just of the bank account, but also of your AP. Also with wages, often people process payroll. They don't download the pay run ABA file. They go into their bank and they individually manually pay each employee. And then often what happens while you're busy in the bank, you're like, oh, I feel like giving this guy $100 extra for a bonus, but you didn't process that on the payroll. Or maybe I forgot to deduct and I deducted. The problem with that is your wages payable, the liability sitting on your balance sheet will never clear out. There will always be a swing either left or right. It's not going to match your payroll reports. And then come financial year end, when you're doing STP finalization, that has to be cleared. That has to match. So it's always good practice, definitely, at least with the ABA, use for payroll, use ABA if you're not going to do it for your suppliers. That's best practice.
There's a question around super accrued to bonuses, whether, do you want to handle that
Yeah,
one?
so that that's a bit of a rabbit hole, to be honest. I had a conversation this week with one of our compliance tax accountants about that as well. But yeah, it depends on whether it relates to overtime or not. And yeah, so we can go on and on about that one. That's something I would also discuss individually, because it can get quite technical, but there isn't really a blanket rule for it.
Kiralee has rightly pointed out that outsourcing include cost as a con? Yes. You obviously got to pay someone to do it if you're outsourcing it. It's just that balance between, paying someone and getting them to do it, really well, and you having all that time and headache back again, versus the other option, which is where you have to employ someone directly, and the outsourcing model takes advantage of scale. So that, you're really paying someone, a fractional cost as opposed to either a full-time or a part-time employee even. So when you do the comparisons versus employee versus outsource, bookkeeping is one of those categories where it just becomes much more efficient, cost-effective versus employing someone. Unless you find someone really good and they know exactly what they're doing. That's the caveat to that. And they're cheap. If you find that person, you send them to us because we'll put them on.
Hey, Chris Flood has a question. I think we're probably going to say the same one, Carla. Is there a reason for directors being on payroll? When we have spoken with our accountant about this, he talks us out of it. Keen to get the answer here.
That's one of the things that Phil mentioned on it. It's quite personal, the wages thing, but it is best practice, I'd say, to be on payroll. There might be different tax implications for different businesses, and their tax accountants do their tax planning for them, and they'll have their reasons.
I'm going to be opinionated here. I'm sorry, but that's an accountant who doesn't understand your business model. So we were just talking at the top around allocating wages to jobs and to overheads. And if your wage or the effort you're putting in isn't properly captured across your systems, then how are you going to know how your margins are tracking? Yeah. And
what about for an owner who doesn't do any time on the tools, Phil, like someone who's fully in management?
Well, that's an overhead cost, and you need to know what your overhead costs are running as a percentage of revenue. And as we talked about, that's got to be single digit. And so there's an approach to accounting where we try and run at a loss. We try all these sorts of tax accounting maneuvers that really, at the end of the day, don't yield a whole lot of outcome from a commercial perspective. And you've got to balance commercial accounting versus tax accounting. Now, it has to start with commercial accounting because that's where you're going to generate your cash. That's where you're going to generate your profit. And then once you've generated healthy profits, because you know your business model, you know how cash is flowing through the business, then you deal with a really good tax accountant to make sure you don't pay any more than you need to in tax. which is why that's quite a complicated kind of conversation around, how much wage should I take versus dividends versus Div 7A. And that becomes actually really fun once you start making some good profit, because there's quite a lot of options when it comes to, the sort of structuring you've got in place. And you might start doing developments of your own. That's a whole other thing again. So how are we going to approach that? But it's quite a, I don't want to seem like we're not answering it. It's just that it's quite a specific kind of answer. But at a general level, if those wages aren't recognised in your accounting system, you can't see how you're travelling on margins.
No, thanks for that, Phil. Appreciate it. I do agree with you. I might have to have a consultation with you just to talk about it a little bit further, or to make a bit more sense. So, but I do appreciate what you're saying. So, thank you.
Yeah, it's a little bit of a thing, and I don't want to bash accountants because they're usually good people, but they're usually tax accountants, and so they don't usually know building and construction deeply. Yeah. And so they'll sort of apply an approach that they would apply if you were running a restaurant or a cafe, a hairdresser or whatever. But in building and construction, this is risky business, thin margins. We want to know what's going on, and so we need to capture all those important data points into the software.
No, makes sense. Thank you.
Oh, good.
I was going to bring up, if we have a second, do we have time for one more there?
Yeah, we got time. Yeah.
Okay, so Abby had a question. I might get you to just pipe up and ask it yourself, but it was way back when we were talking about tracking job costs, and she had a question about how this would, do you have an example of how the two tracking categories would look in a P&L? Abby, do you want to just clarify?
Yeah, look, I may be talking about something completely different, but when you talk about the tracking categories, so we have all of them set up so we can track our jobs individually, and we can run reports on different jobs and track all the profits. And we also have our chart of accounts set out really specifically. So we have, our sub-trades and our materials and our labor all separated out so we can see whether we're making profit on each of those aspects. But you talk about a second category that can be utilized as well. I'm not sure what that category is, how it's implemented, or how that then translates onto the P&L. I don't know if you've got an example of what that would look like and the benefit of bringing that in, or how that then brings it in. But yeah,
that's if you've got like your activities, if you want to track activities within Xero, you get two layers. You get your job codes, and you can have a second layer where you can set up tracking categories for activities. Not all builders that I've seen use that though. So I'd say 50% of the ones that I work with use that, but that would be something like you'll have a job code, but then you'll have the different activities for plumbing, plastering. When you run your reports in Xero, you can set the filters for each tracking category, and it will bring up the P&L for that job code, for that activity specifically.
So when you're talking about activity, do you mean like labor separating it out into framing and that sort of thing, or do you mean like your different sub trades like your sparky or your plumber?
Well, it depends how you want to do it. Like activity is just one example. The second layer of activity can be anything. It can be a location as well. Activity is just one example. Yeah.
So theoretically, you could do it you could use activities for your stages. It really it's a free kind of field or type of field that you can set up
detail that you can add in if you want more specifics on
and then you can run reports against it. Abby, what software are you using for job management?
We're based in New Zealand and we use Builder Price.
Right, okay.
And we run through Xero. So we filter all of our bills through that and things like that. So
wherever we can, we do try and recommend a lot of that job costing happening in the actual job management software.
Yeah,
because you should really be seeing your estimate and your actuals next to each other per item, and seeing where things are going off track, or where you're doing well.
We also have like a real old school spreadsheet that tracks like the original estimate against every invoice that comes in and how we're then offsetting at the end, which is purpose built, but it works. But it's just trying how to get them all aligned and essentially automate it if possible and where possible. That's really helpful. Thank you.
That is back costing or job costing, which is great. And it doesn't matter how you do it as long as you are doing those specific things. The only thing with software is that it has automated a bunch of that stuff, so you don't have to do as many things manually.
Great, thank you.
Right, any other questions we reckon we didn't get answered there before we wrap up? Sounds like
looks pretty good. Nice work, Phil and Nadia. Absolute killer session. Really good stuff. Even I learned a few things. So You guys absolutely brilliantly. Awesome. Well, guys, thanks for attending. Have a great day and catch you guys soon.